Forget inspiration. Habit is more dependable. Habit will sustain you whether you're inspired or not. Octavia Butler. Go, Octavia. Great advice. My friends, habit. Your habit of 10 to 15 minutes a day, every day the market is open, learning how to chart. You will not learn the nuances if you don't spend 10 to 15 minutes a day. And what we teach here, you can use on any chartable stock or ETF. When is something chartable? That's when you can find reliable weekly vertical crossovers and 2-day recrosses. Very, very simple, my friends. It's when the price percent oscillator crosses over the red signal line. On the weekly chart, it's when the 2-day has rotated in the opposite direction of the weekly and then crosses back over in the same direction as the weekly. So that's how simple it is. It sounds simple, but it does take some nuance for you to learn, for you to practice, for you to understand how to set your profit and loss bands. Yes, this does not always work. So when it doesn't work, that's about 10% of the time when you have a great chart, a great ETF that is chartable, or a great stock that is chartable. So when it doesn't work, what do you do? That is where the real trick is. Also, another trick is knowing how long to ride the profit wagon. That is, how long can you ride it up before it rotates over and goes down? All of those things, those two things in particular, are the real keys that you learn. How to cut losses when a trade does not work and how to maximize profits when they do. And any chartable stock or ETF, those weekly vertical crossovers are going to work 80-90% of the time if it is a chartable stock or ETF. You're going to learn how to do that by practicing. We are not a stock calling service or an education firm. We want you to practice with us every day. Got a great book, Charting Your Way to Wealth. Buy that. And just subscribe for free at chartingwealth.com and get our trainings every day. Great training for you today. It is entitled, Be Wary, Very Wary of Profits. My friends, anybody who gives you a sure thing, this is the way it's going to go forever. If you'll just pay me X amount of money, blah, blah, blah. My friends, 10 to 15 minutes a day. Keep your nose to the grindstone. How do you get to Carnegie Hall? Practice. Let's jump into these charts. We see everything up for the day but gold. So that means stocks and bonds. The S&P 500 up 0.42%. Now, what do we see as we look at the candle for this week? It is a slowdown in the up movement. It's a red open box, not a solid red down candle. We do see the price percent oscillator pulling away from the red signal line. The derivative oscillator gaining upward momentum. Go to that 2-day chart. What do we see there? Well, of course, the latest 2-day candle did finish forming today. And what we have on that 2-day candle, as we draw ourselves as accurate a trend line as we can get, again, would like to solidly connect 3, but we're pretty close. Well, we actually have with the first day of this latest 2-day candle. Completed 2-day candle. What do we see? We see price right there above the 2-day trend line. So we do have 3 connected. It's a red spinning top. Means, of course, some indecision. Whenever you see spinning tops, you can see where price movement's been both up and below the candle body itself. These are Heikin Ashi candlesticks, a great training on Heikin Ashi candlesticks. I'll put it at the end of today's training. So those of you who haven't taken it can. We see the derivative oscillator on that 2-day chart still heading up. Price percent oscillator still heading up, but losing some of its prior momentum. Go to the half-day chart. Of course, we had a big down morning and then things trying to recover some in the afternoon. As far as our Heikin Ashi candlestick goes, we see that things had blown through the 2-day trend line and then moved right back up to it, but not through it. Derivative oscillator gaining downward momentum. Price percent oscillator is negative on that half-day chart. So we're continuing to watch, see how this week ends. Like we said, up for the day, 0.42%, trying to see if this market's going to actually take off again. So that's where we are as we go into Friday on the S&P 500. What about the NASDAQ 100? Up more, up the most of our charts today, 0.78%. But again, you can see price percent oscillator flat, derivative oscillator negative, losing some downward momentum. Red open box candle, slow down in the up movement. Like on the S&P, we've not reached a higher high this week. That's part of the issue. Also, the candle body itself is not as high as the prior. Still negative though. Look at the 2-day chart. It crossed over back on the 9th heading up. Also ended here with a red spinning top. Even redrawing that candle, we're right there at the 2-day trend line, just barely above it. Redrawing not the candle, but the trend line itself. Price percent oscillator also sort of weak, anemic. It's still moving up a little bit. Derivative oscillator gaining some upward momentum. Half-day chart, we saw it cross over going down actually in the afternoon on Wednesday. Down more in the morning, recovering some in the afternoon. Like we said, up 0.78%. Price percent oscillator heading down. Derivative oscillator gaining downward momentum. So again, stocks are just trying to find their way. That's where we are on our 2 stock indexes. Let's go to bonds. What do we see there? Up 0.51%. We have a green open box candle, quite a wick on top, little wick on the bottom. Derivative oscillator still negative, but barely losing downward momentum. Price percent oscillator is just flat on that weekly chart, but still confirmed down overall is where the wave is on that weekly chart for bonds. What do we see on the 2-day chart? Of course, it crossed over going up back on Tuesday the 17th. This latest candle, decent sized green up candle pushing through that weekly trend line heading up. And we do need to redraw now that we've had a crossover and we have a new fully formed candle. We redraw our trend line on that 2-day chart. That's the way you do those things. Bottom up, top down is the way we draw trend lines. So on an up move, when you have a crossover, remember you always draw that trend line from the bottom. Confirm down, always draw it from the top in each separate time frame. Gold for us is our weekly time frame. Blue is our 2-day. And this chartreuse color is our half-day. So we see, again, a conflict. We see the weekly down, the 2-day up in bonds. It means we don't have a trade. They both have to be moving in the same direction. We look at that half-day chart. We can see things moving right up on it. It's about time to redraw it and do the best we can there to connect 3 candles or more. Sort of hard to do, but let's see. We don't want it to be too flat on us. We'll leave it right there. But we see that price percent oscillator on the half-day chart gaining some momentum. Derivative oscillator losing a little bit of momentum, but still heading up quite strongly. So again, nothing in bonds at this time. Now, typically what happens? If bonds are not doing well, usually means stocks are doing very well. If stocks aren't doing well, usually means bonds are doing well. Why? Because money tends to flow from the stock market into bonds when the market starts to weaken and vice versa. So again, everything being up for the day, a little bit of an anomalous, but what we still see happening is again, overall sentiment in bonds is down. And again, we look at stocks, it's up on the S&P and still flat on the Qs. So what's that telling us? We've got a lot of indecision out there in the market, trying to figure out what the hell it's going to do. And the nice thing is for us, we just keep the powder dry. You don't ever have to trade. First rule of trading is don't lose money. Second rule of trading, make money. That's why we talk to you about practice trading. Practice, practice, practice to learn. And again, using that trade worksheet, daily market worksheet, and the weekly market worksheets, you'll fill out those weekly market worksheets tomorrow. That's what that is all about. And again, if you've not taken those trainings, please do so. You will get so much out of them. We'll have a couple at the end of today's video for you on how to fill out those worksheets. I'm going to put in the weekly market worksheet and the trade worksheet, and also that training on the Heiken Ashi candlesticks. Now, lastly, we go to gold, the only downer for the day, down 0.19%. And look at gold. We talk about when it peaked, back when everybody was talking about gold's going to $15,000 an ounce. That's almost always when it peaks, when you hear stuff like that. It did back on the week ending the 7th of August. And it's pretty much gone down since then. Down week forming now, price percent oscillator spiking over, going down, derivative oscillator gaining a little bit of downward momentum. 2-day chart pulling away from the red signal line on the price percent oscillator, derivative oscillator gaining downward momentum. Down candle. And again, below the weekly and the 2-day trend lines. Go to the half-day chart. What do we see there? Well, we see it also heading down in the morning. A little bit of a recovery in the afternoon. Still down for the day, 0.19%. Do we want gold to go up? Of course we do. And when it goes up, what are we going to do? We're going to ride that pony. But it ain't going up just yet. Again, those of you who've been in the process of shorting gold, it has done well for you. So that is where we are at this point. Again, I hope you practice trading on all of these opportunities that you have, as again, you learn as much from the successful practice trades as you do. Actually, if you pay attention, you learn more from the bad ones than from the good ones. It's like when the tide comes in, all the boats float higher. Doesn't make you a genius because you can see the water flowing in. But when the water's sloshing about, maybe going out of the harbor, and the boats are starting to go down almost imperceptibly, but you can figure out what's going on, that's when you get to be a genius. Again, buy our book if you don't have it. Support us on Patreon. All sorts of special training there. What do you get at Patreon membership? Oh, the big thing is, of course, our once a month live question and answer session where you can submit your questions and your favorite stocks and ETFs that you'd like to see. Are they actually chartable? We'll help you review those for practice trading. We do that live for our Patreon members once a month, and they love it. The other thing that you get is all of our special trainings just for Patreon members. The biggest is, of course, Options Made Simple, the Charting Wealth Way 3-part series. First thing you get when you sign up at any of the 3 levels of Patreon support. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.